Okay, we are live. Good morning. Good morning, as you can see, with a nice cup of tea. Welcome to another episode of the Crypto Hour. So we go straight into it, as there's lots to talk about today. So let me share my screen. People waiting to come in. Okay, let me share my screen straight away. Okay, sorry. Okay, so if we have a look at the crypto, I know it doesn't seem like much on a daily chart, but if I switch to the hourly chart, you'll see that there has been quite a good period at the moment. As you can see, the crypto market has gone up substantially this week since Sunday, at least compared to where it was in the past few weeks, where it's been pretty much I wouldn't say dead, but almost doing absolutely nothing. So there has been a kind of like a green week. And if we see here on CoinGecko, where all the cryptocurrencies are listed, you can see on the 7 days that pretty much every single cryptocurrency is in positive territory. Okay, so they're all gone up quite significantly. And if we look at the market cap, again, for the last 7 days, you can see that the market has added about 100 billion to the total value. It's gone down slightly now, so about 75 billion. So it's been what is being described as a kind of like a green week. So prices going up, and interest in risk assets, as cryptocurrencies are considered, is starting to come back into the market. Now, so the question is, and the question that everybody's been asking themselves for the past few weeks and months is, have we hit the bottom of the market, and is this the start of a new wave, a new let's say wave of money hitting the risk assets, so including crypto, technology shares, etc. And it is an interesting question, because for that we need to look a little bit further ahead than just crypto, but we need to look at the general economy and see what's happening. And what I will do, I will share with you the kind of things that I have kind of like I'm keeping an eye on to understand when the market, we can say that we'll have hit the bottom, and when we can start seeing at a period of growth, they will start hitting every asset, but in particular the risk assets first. So if we see what's happening this week, recently, we can have a look on the calendar. Not many kind of like good news have hit the market. We've had, from the manufacturing point of view, the German data has been, negative, kind of like going back and getting worse. So again, anything below 50 means contraction. The same for the UK, similar figures. And also consumer confidence going down in the US quite significantly. Now, the one good thing, and this is why probably the markets have reacted positively, is that there's starting to be some good results reported in the stock market, with some big companies that reported their results and with higher than expected profits. Now, although that can be good in the short term, for the long term, we need to look at different things. We need to look at what happens in the biggest market there is in the world, which is really the bond markets. Now, if we see if you just Google it yourself, that it for you. The whole bond market is estimated about 120 trillion, which is pretty much double the size of the stock market. Okay, so when we're considering, what is the bond market and why is there in the first place? I mean, the bonds are how the every country pretty much supports their spending, public spending, because most of the countries, work at a deficit, so they spend more than they raise in taxes, and so they need to borrow money to be able to pay for public services. So it is kind of like the market that underpins everything else. Okay, so if there are any problems in the bond market, they will then trickle down and affect, the stock market and everything else, and will affect mortgages, interest rates, and everything. So it is kind of like a huge market, and one that everybody needs to pay attention to if you are looking at medium to long term, because at the end of the day, what happens in the bond market determines what happens everything else. Now, a big intervention this week in the bond market, and what actually rattles the market a little bit, is the Bank of Japan. Now, if you see what happens now, what happens here, this is the dollar yen chart, and as you can see, in 2022 alone, the dollar has devalued, the yen has devalued against the dollar by, at the top of last week, up to 35%. Now we've gone down slightly, so we're about 30.5, 31. And we are at levels that were not seen. I can even show you these levels on a daily chart. Look, I can make it as small as I can, going back to 2007, and we still are nowhere near where we saw these levels before. I need to go actually to a weekly chart to be able to actually show you on a screen. As you can see, we've gone beyond the 1998-2000 high, and we are now kind of like let me see. Again, let me bring it all into one chart. So we were up here, almost like going at levels not seen since the early 90s. Okay, so it's like this is 30 years of currency going in one direction, and the yen gotten stronger and stronger and stronger and stronger, and all of a sudden, in less than a year, we kind of like rewound the clocks 30 years. Now this causes huge problems for Japan, and what they have done here, let me let some people in. What they have done this week or last week, I think it would be more correct to say, what they have done this week, you can see this huge candle here. This was last Friday. And it is thought that last Friday, the Bank of Japan intervened in the bond market. Now think about that. Japan has a positive trade balance in the sense that they export more than they import. And so they store a lot of these kind of money that is owed to them in bonds. So what they have done on Friday, they have sold basically US bonds to buy yen. Okay, and this is, you can find it in the news as well if you bother to Google. Oh, sorry, no, this is the where was it? Japan, there we are. So it was suspected that intervened in the bond market by the tune of 37 billion. Okay, so this is not, it was not, it's not been announced. Kind of like it's traders that had basically done a post-mortem of thinking, why could it see such a big movement, counter trend all of a sudden, and by looking at the volatility of the US dollar yen, they actually worked it back and thinking, well, the only way this could be, this could happen is with the central bank intervention. Okay, so this is from the Bank of Japan intervening. What does it mean if countries in the world start selling US dollar bonds? What does it mean? It simply means that there is more supply and less demand, And as a result, obviously the US needs to sell bonds to finance the huge debt, standing at over $30 trillion. Okay, so imagine that if they got this $30 trillion, imagine that you had a mortgage for $30 trillion, and all of a sudden the banks comes to you and thinking, actually, you know what, instead of charging you, whatever, 2%, we need to charge you 3%. Or something like this. It's not a small amount. So each percentage point, we're talking about, tens of billions of dollars every year just to pay for the interest. So it is a problem not just for obviously Japan, but it is a problem for everybody else if there is less confidence in the bond market. Okay, because who pays for these bonds? Who buys these bonds? In great part are central banks. They're kind of like they play a game of Peter robs Paul, in a way. So they take the money from one place, put it in another, and they play a game of what was it called? Chinese whatever, Chinese boxes. But the other people that buy bonds are individual investors and companies like me and you that may want to put some of their savings and receive a return for their for their savings, and they invest in bonds that generally are considered very safe because they're underwritten by central banks of a particular country, and in particular big central banks like the Fed and the European central banks and the UK and Japan's. So they are considered in a way fairly safe investments. But what happens if people stop buying these bonds? This is a huge problem because, as you can see, we have a huge amount of world debt of about 120 trillion, and any increase on that can only be in a way paid in a single way, which is devaluing the currency that we hold in our pockets. Okay, so that's the only way it can happen, because there's no other way. They can't just like all of a sudden start generating new productivity and everybody's work is worth 10 times as much. That is not going to happen. Okay, so the only way is to say, well, we owe you 100 trillion, fine, but now your dollar, instead of being worth 1 gram of gold, let's say, is now worth a fraction of that, and that's the only way they can do it. So for me, and the other thing that actually they had the big news that to report this week on a macroeconomic level, again, is the raise of the interest rates in in Europe by the European Central Bank. So again, they not only raise the interest rates at the highest level since 2001. So again, by 0.75%, 75 basis points. Okay, a basis point is 0.01%, by the way. So they raised the interest rates by 0.75 percentage point, which is massive, because for a long time, for almost a decade, we had interest rate was close to zero, pretty much, and now we're over 1.5%. So now this is happening everywhere. So it's not in Japan, US, Europe, China. So it's big news everywhere. So what do I look at to decide if, let's say, this is a temporary happy period, or if it's the start of something more lasting? Okay, and first of all, let's examine how movement like this can happen. Okay, something like this quick in only a few hours, and it's even more if you look at other things like Ethereum. Ethereum has had a very good week this week. So it's even more if you look at Ethereum level, similar chart. So similar time we started on Tuesday, and now the market is settling back at a different level, but we have gone up since since the beginning of the week. At the moment we're standing at 16%, up to a maximum of about 22 as a maximum. Okay, so it's been it's a crypto market has gone up by pretty much generally speaking, by a tenth. That some places, some currencies like Ethereum, Cardano has gone up by a lot more than that. So the reason why these movements happen, first of all, they are because of liquidations. Let me go back to Bitcoin so I can, because probably the Bitcoin USDT is the most traded crypto pair. Okay, so what happens is that, you know, over a period of time, Bitcoin has moved, as you can see, sideways in a particular range. Okay, and with all the doom and gloom that we be hearing, you know, in the news in general, and we talk about it every week, there's a lot of leveraged positions on the way down. So people that were betting for the price to go down. Okay, and when you use leverage money to trade, so you have an account with for those of you that have never done it before, you have an account with a broker, and you can trade a number of times what you have got in your account. So, and this is people that, for example, people that trade Forex do it all the time. You have maybe, you know, $10,000 in your accounts, but you buy lots of 100,000, million, because you don't physically buy that lot, but you just trade on the difference in price. Okay, so as long as you have got enough money in your account to cover a certain level of movement, if the price goes against you, the broker will let you use that kind of leverage. The problem happens when the price starts going against you significantly in a way that you cannot anymore support with the cash that you have in your account. Okay, so what happens in this case, there are traders that were trading for the price of Bitcoin to carry on going down, you know, will hit a point in their account where the broker will liquidate them. Okay, so in this case, you know, when the price is going up, liquidations mean that the broker would actually get them out of their position, and because they were betting, so they actually sold Bitcoin, you know, to gain by the price going down. The liquidation means that the broker buys Bitcoins back, so that their position is back at zero. Okay, so basically the trader loses everything, all the size of their accounts, and the broker is again in a neutral position, because obviously the brokers don't want to be exposed to price fluctuation. They just get transaction fees from you trading, but they don't want to be exposed themselves. Okay, so what happens is that when liquidations happen, you can see movements get accentuated and accelerate, because brokers will, you know, liquidate positions, and that puts more wood on the fire, so to speak. Okay, and so whenever there is a significant, you know, a play, so maybe lately they were looking at this level here for putting their stop losses. Maybe some brokers may have used this level, some brokers may use this level. You can see that. So these, normally you will see some sort of kind of a pause like this one, sideways movements when we get to these powerful levels. But here we're just broken through 1, 2, 3 different levels, actually 4 even here. So, and you can see that each time we break one of these levels, it accelerates. Okay, the movement accelerates. So this is kind of the explanation why everything is green, because everybody's been betting for the market to carry on going down, and the bears, because we're in a bear market, obviously the bears had control, let's say, of the market. So they were selling before things that they didn't have in their account, basically, okay, by borrowing from the brokers, and now is going against them. On FTX alone, they were over 1 billion of liquidations in one day. Okay, and this is the day here. So this is the reason why we see these movements. But how can we see if I'd say these are kind of like long-term trends, or if it's just a blip? Like, as I say, we can see the price going up, and then we just restart the bear movement, and the price will carry on going back down. Okay, there is 3 things for me that need to happen. Okay, first of all, and you can see whenever you see all these, and if you listen to Christine Lagarde, the president of the ECB, you know, just and listen to the announcement of the raise of interest rates. It's everything about inflation. So they are doing the raise in interest rates to control inflation. And the same thing the Fed has been saying. I think our main target would be to control the inflation at whatever the cost. Okay, and the same in the UK and everywhere else. So interest rates worldwide are going up because everybody's trying to control inflation, which is at the highest point in the past 40 years. In the UK, for example, we've gone back above 10%. You know, again, these are levels that were not seen since the rampant 80s. Okay, so the first thing we need to see a slowdown in the inflation, with the inflation starting to move on the way down, okay, to be controlled. So that's the first. Until we see the inflation being slightly, so we can see that the policies, the raising interest rates, the tightening monetary policies are having an effect on inflations, country would just be carry on tightening. So raising interest rates and reduce the amount of money in circulation. Okay, because that's the only way that they can try and control inflation at the moment. That's the only weapon really that they have left in their armor. The second thing that I will wait that this will actually cause, because what will happen, and we talked about this before, by raising interest rates, you are hurting the economy. Okay, because everybody has basically less money to spend. As consumers, you pay more taxes, you pay more for your mortgages, and etc., for your loans, etc., etc. The same for companies. Okay, so consumers having less disposable income, they spend less money with companies. Okay, and again, companies, they get less income. So we'll see the reporting season will come later on. Okay. The ones where you see the effects of this pain, because we only started, beginning of 2000, really end of 2021, beginning of 2022. So the effects of it will be seen at the, end of this year in 2023. So this pain will have to show somewhere. So something is going to break. Okay, so it will cause so much pain politically that the governments will be forced to go back and intervene. Okay, this is probably going to show up in the bond market first. Okay, as we can see, because it is the largest market, is the one where some countries actually hold the trump cards. Trump, I don't mean Donald Trump. Okay, the top Trumps. In the sense that there are countries like Japan, like China, they have a huge amount of dollar-denominated debt. And if things start going wrong internally, they may not hesitate to use that to support their internal policies. Okay, and this is a big problem for the US, because the US has supported its spending by basically spraying its dollars everywhere else in the world, because everybody else needs to use dollars, needs to hold dollars. So they basically are slowly devaluing their currency, but without feeling the pain, because the pain is spread throughout the world. Okay, so if the world starts to ask for their own money back and basically doesn't support the dollar bonds, the dollar loans in a way to the US government, that will cause then interest rates to go up in the US even again, to attract more investment basically in bonds. And as a result, it will increase the cost of money in the US. And so the dollar value in the long term will go down. Okay, at the moment we are the historic high in a way, because everybody is panicking, everybody is in fear mode. But this will have to change, because this is causing, obviously at the moment the US, the dollar is very high. That means that yes, it costs them less to buy the goods to produce whatever they produce in US, but then their products are more expensive everywhere else. So obviously they will be bought less across the world, because people have less money to spend, and not only that, but the products in dollars are now more expensive to buy. Okay, so that's the actual the second point that we would need to see. And the third point that really we need to see for to have a sustained growth movement would be intervention by central banks. Okay, and again, how will we see this intervention? What does it mean? It means start money printing again. Okay, because it will get to a point where people are hurting, you know, and they starting to lose jobs. Countries going into extended recessions. Weaker countries will start going bankrupt, and there is only one way that they can see using this system to, unless they actually press the reset button, which may happen at some stage in the past, as we we heard a lot and we talked about a lot in the past. But at the moment, the only way they can try to mitigate the effects of all this is start printing money again. So they will have starting to see inflation coming back a little bit under control, some pain hitting the market strongly, and probably in the bond market. And third, the central banks intervening again. We start in money printing. And whatever this is why when you hear Jerome Powell speaks, the Fed chairman, everybody's listening, because they are looking not so much for how much is the interest rate going to be next month, but they're looking for a change in policy or change in attitude in the actions they will take in the future, because they are waiting to see, well, we heard the markets enough, now we're stepping back and we let them do their thing. Okay, and those are the three things that really I'm waiting for before we can say, yes, we can, this is the start of a bull market again. At the moment, as I say, what I am expecting is, unfortunately, as much as I want for this to continue, and start to see Bitcoin at the levels that we saw last year, I don't think we're there yet. Okay, I think we are kind of like there's a chance that we will, as you can see, if we look at, let me go into a daily here. So we are still very much within a range that we've been since June. Okay, yes, we've gone back from the bottom of this range to the middle of the range, but we're still very much between 19 and 22,500. We've gone just slightly below for a few days here. We've gone above it for a period in August where everybody was happy, but now literally we have been in this kind of like no man's land for now, June, July, August, September, October, 4 months now. Okay, and what my expectations are really is that maybe we might revisit the top of this range, and then we start again on the way down, unless we had a real decoupling of crypto from other assets, which is we're starting to see a few signs of, but is not as pronounced as it was in 2018, 2019, before the institutions started actually looking at crypto as an asset class to invest in. Okay, let's have a look at a few more. The other big thing, the other elephant in the room that we need to wait for, and that can affect all markets, will be the US midterm elections. Okay, so you're going to have 35 seats in the Senate out of 100, so 1/3 of the Senate seats will be up for grabs, and all the seats in the House of Representatives, so 435, will be in play. So this is a big period that we're waiting for, and obviously it will affect also what the president is going to be able to do. because depending who gets control of the the House of Representatives and of the Senate would mean how many of the president policies can receive approval and can go forward. Otherwise, we'll be in that period where the Democrats control one part of the House, the Republicans control the other parts, and basically the executive powers, the president really cannot do much himself because it will not be able to get approval from the opposite party. But the one thing that's interesting is that this is for the first time, will be the first elections in the US where really crypto is on the agenda. Okay, so now there are many many of the candidates now that they are talking about crypto during the election campaign, and many of them have been quite outspoken about crypto. Obviously, the I would say new candidates are all kind of talking about it in a positive way, most of them. But obviously, there's a few of the old boys that are still very negative about crypto, and this is very significant again because as we are going into a period where we're starting to talk about regulation, it's important to have some people in the both in the Senate and the House of Representatives that can speak for crypto as well. But it seems to be so. The support for crypto has grown from both sides of both from Democrats and Republicans. And this is that kind of, there is a bill in the Senate introduced by a Democrat, Kirsten Gillibrand, and Republican Cynthia Lummis. So you can see that they are working now together on some of these regulations because it's something that will affect everybody, and also nobody wants to be seen as the as giving the other side an advantage. Okay, because thinking obviously, whatever these people think really behind the scenes, it is obvious now that crypto is in the interest of many voters. And people will look at policies towards crypto when they sign, especially the swing voters, okay? Now, obviously, there are some people that will never change their allegiance, but then elections are decided by people who switch their vote from one part to the other, depending on what they see. Okay, so this is the first time where we've seen these what they call the PACs, or political action committees, related to cryptocurrency. Okay, so many have actually sprung up in an effort to support pro-crypto candidates, but also they have played a role in the election primary. So when the parties are deciding, the candidates to put forward, and this is where we can see, the crypto industry starts having an effect, because money talks in US elections, and it makes a big difference if you get a big chunk of voters that want certain policies looked at. Then the candidate they would promise to give people what they want and receive their support, and so their money and so on. So there have been people like Andreessen Horowitz and Sam Bankman-Fried, she's the founder of FTX, who's been in the news this week as well, because he's been talking about about Coinbase as a possible acquisition for FTX. So this is how well they are doing since they came onto the market. So it's again, guys, this is all like good news in a way, because it shows not so much good news in the sense this A means B in the crypto market. It doesn't work like that, but it talks about increased what's it called, influence of crypto in general in the I would say normal world, affecting then elections and regulators. Okay. Now, the other big thing that we can report is now apparently Elon Musk officially owns Twitter. And it's not just obviously, you all know Elon Musk and his influence on crypto. So apart from all his tweets about Dogecoin, Tesla has been one of the largest corporate investors in Bitcoin. And not only that, but this is even more interesting. Binance confirmed as investor in the Twitter takeover. So reportedly, they have invested $500 million. I committed $500 million to invest in Twitter. Okay, so as part of this buyout. So this is interesting. Kind of Binance is directly working with Elon Musk to in this Twitter. So if they have invested in this, it means that there have been some discussions, obviously behind the scenes, and at least maybe we can expect a renewed attention of Twitter to the crypto world and Web3 in general. So we'll see what comes out of this in the following weeks. But definitely it's kind of has been the biggest news from the point of view of the stock market, and somebody like Elon Musk, one of the I don't know if he's now the richest man in the world or one of the richest men in the world, that is claims that he's doing this for humanity. Okay, so we'll see. Obviously, at the moment is like King Midas, everything he touches turns to gold. We'll see if he manages to do this with Twitter as well or not. But apparently he's got good friends, So the chairman, the founder of Binance, and it's interesting. So we'll see what happens. By the way, another big news in Binance. Still, we need to hear a little bit more details, but they have launched their own Oracle. Like Chainlink Oracle is the kind of like points of contact between the real world and smart contracts. Okay, so the ones that tell the smart contracts exactly the data that they need to use to then execute. And the biggest one being Chainlink, that you probably all know. Now there's one being launched on the Binance Smart Chain as well. So we'll see. Again, Binance being very centralized again. So we'll see what that means and how much it will be used. Obviously, the Binance will use it, but how many decentralized applications will use that instead of other more decentralized options remains to be seen. A few more news to report. BitPay introduced USDC and Ethereum payments on Polygon. So again, BitPay is a way of spending your crypto directly, and so it's now announced that you can use USDC and Ethereum on Polygon. So obviously, Polygon, the fees on Polygon are much lower than on Ethereum. So it's again what so these are bridge tokens. So they are Ethereum. They've been bridged onto Polygon, and USDC has been bridged onto Polygon. But you can use that now on BitPay, which much lower fees because of the obviously Polygon is much cheaper. Matic is much cheaper than Ethereum. So again, we bring it. So these are all like little pieces of the puzzle that show you how crypto is getting closer to the consumer and the point of sale. So we are getting closer to the point all the time. All these little agreements and little things that they have been discussed between providers and blockchain projects bring crypto closer to the end aim of spending your crypto coins directly to buy and sell goods. and we keep seeing this kind of things. We heard from news from Dubai and other countries that are doing similar things. Now, Norway has opened a decentralized tax office. So again, a tax office in the metaverse to educate a younger audience about taxes related to DeFi and NFTs. So it's some of these government agencies are actually almost like the real thing that where you can do pretty much everything, and some countries have already started on that way. Some others like this are more like educational services, but again, these are sovereign countries using the metaverse to talk to their audience. At the end of the day, this is what we don't have to look any further than that. But they want to be seen to communicate with their audience. So it's significant, and now they see the metaverse and Web3 as a place where they need to do this. The same way that it took them a while, but before they started putting their services online and having websites, now this is kind of the next step forward. Now, other areas, other things that I picked up for you. Now we're starting to see that this is a Swiss bank, Cyber Bank, now custodies blue chip Ethereum NFTs. And we know that the kind of like Bored Ape, Yacht Club NFTs, and some of these things are in the hundreds of thousands of dollars in value. So now, in a way, banks are starting to get a little bit of a foothold in this market, because what they are really, generally speaking, banks are considered to be safe. Bank is associated with bank vaults. So the idea they're starting to use, they're trying to use their market power to start attracting some of these custody market. So if you have your own crypto, your own NFTs, the digital assets, they are valuable. Some people are perfectly comfortable on having their own solution and custody this themselves, but other people maybe consider they want to delegate this to somebody that they trust, like, although we know better, but like banks have got at least a good name from that point of view. And there are more and more now of this. Every week we read about different banks that are offering other crypto custody services. So this bank will accept at the moment ERC 721 NFTs, okay, which is a standard, the Ethereum standard, and the same standard that is used by the Bored Ape Yacht Club. But again, is a new step in that direction. This is we already covered, and obviously we couldn't have a crypto session. We are talking about Cardano. so this is and now there's for those of you that use Luna Crash, is now Cardano has hit an alternative rank of number 1 out of 3,154 coins they are reported. And this is the activity that they look at. So they look at social engagement, social mentions, shared links, and all these are gone up significantly. And now this, basically Cardano is now the one project that is at a social level, and influencers and all the social engagement, it's higher than any other project. Okay, so by the way, and there's another thing, by the way. This is the Cardano. This is one of the European lawmakers, and talking to the Cardano. Sorry, was this Perian Boring? So it's Cardano's research and development. And I think is Jonathan, just help me out here. I think is employed by the Cardano Foundation.
Yeah, he's high up in the Cardano Foundation.
So again, we are talking directly now. Crypto projects are talking directly to lawmakers, and even there was like a tweet by this guy saying that Cardano is like a rocket in the crypto space. So this is talking about, so what they were discussing, by the way, is they were not discussing NFTs or Cardano or anything else. They're talking about the regulation of crypto from the part of the European Union. So it's good to get at this level because obviously, as a politician, yes, they got their interests and they got their lobby groups, but at the same time, they want to put structures in place that they are meaningful, and they need to understand, and they need a lot of input from crypto projects to understand exactly how to then regulate them. Otherwise, they're just gonna make their own mind and make a mess of everything. So the fact that Cardano is actively speaking to them is definitely a good step, not just for Cardano, but for crypto in general. And if we could all use that instead of actually squabbling and arguing between projects, if the whole crypto could adopt that kind of approach, so that we all going towards the same solution, because at the end of the day, if the market grows, it benefits everybody, rather than just trying to be a big fish in a small pond. Is much better to be a small fish in a huge pond, and we can achieve this by doing this kind of work. And not just this, but you might have heard in the past that Charles Hoskinson has actually been in the US and talked to Congress several times, not about Cardano, but about crypto in general. Okay, and these are the things that really should be reported and talked about, rather than is my project better than yours, and kind of like who's got the better the better appendage. It's talking about like that, like they often do when they when they discuss things on social media. Okay, I think we have finished the things to share with you for today. Let's take some questions.
Look, I put my questions down in the chat as well. Is it okay if I ask a question?
Okay, let me have a look. Let me open the chat box.
Well, I could comment on it. For me, the biggest news in the whole week has been about these ideas about central bank digital currencies coming up in the world, like Kazakhstan with XRP, and this Sunak Vichy boy, he is really an XRP promoter, and he is talking also about a reset thing, a net zero option, to take away all the debts and everything. And I'm really quite scared because of this non-freedom money that I consider it, or the CBDC option. Could you please comment on that subject, and also on the consequences in your idea for XRP price and gold price, also with the BRICS idea of a reserve currency? That's sort of for me, the biggest thing that I picked up.
Well, I mean, to be honest with you, I mean, it's not. I don't generally talk about central CBDCs because they're not crypto. They're not crypto projects. They're blockchain projects. They're not crypto projects, really. It's almost like the dark side. It's a dark side of crypto. If we got to that point where you were forced to use CBDCs, then we are really going into Big Brother territory there. And this is what the whole crypto industry stands against. Okay, and everybody will fight tooth and nail against that. Now, what Rishi Sunak has been saying, and what comes out of the mouth of any conservative politician, to be honest with you can take with a pinch of salt in the UK, because they're a bunch of muppets, really speaking. And the unfortunately, what happened is, for those of you that are not in the UK, at the last election, so that you could get Brexit through Parliament, they basically kicked out any decent politician that they had left in the Conservative Party. So although you might have this prime minister or that prime minister, the actual talent pool that they have to then pick up all the ministers to do the real jobs, it's just not there. So they're just like completely incompetent. And the fact that there is one prime minister instead of another doesn't change that. It might change the figure at the top, but at the end of the day, if you see that the kind of minister that have been chosen have just been like a warmed up soup, basically a rehash of what was there before, and people that have been disgraced already. So it's been supported, chosen people that have already been disgraced and lost their job. So what he's talking about, he might talk about what he wants. Doing it is a different thing. Because I think he's going to have biggest problems to sort out than CBDCs. And well, or as much as he would like to press the reset button, so he can't. They can't push the reset button for the UK without the same thing happening everywhere else in the world. And that this is, I mean, the fact that they're going to have to push a reset button is coming, because it is. It is simply the world. Excuse me. Simply this economic system that's been put in place is collapsing. So generally speaking, if you look back at history, this happens roughly every 50 years whenever there's a fiat currency. So we are now just beyond the 50-year mark. From 1971 was the start of the current monetary system. So we're now 51 years. What normally replaces a fiat currency system generally is a hard currency system. Well, historically speaking, gold has been at the back, supporting a hard currency system whenever this has happened in the past. If this is going to change in the future remains to be seen. So there has been talk. And Russia and China talked for a long time about changing the fiat system for a commodity-based currency, and this is what they are trying to implement in the BRIC. But at the end of the day, I think they are just like whether the dollar is as a international payment currency is replaced by something that is created by the BRIC or not. That will not change the current situation, because basically the bond market will determine if the current financial system is collapsing or not, whether it's dollar based or is based on the Chinese currency or a new currency that will be created, whatever that is. Unless we are replacing this and pressing the reset button and recreating a sort of, whatever you want to call it, gold standard, Bitcoin standard, or whatever else you want to consider, in history, the only periods that they have seen stable economic growth is when we had a hard currency that supported the system. Now, I mean, from my point of view, I can see that, and really whatever you might think about it, Bitcoin is the only form of, and cryptocurrency in a way, of absolute scarcity that you can create. So it would be ideal to be underpinning a new financial system, because the amount of coins in circulation, it doesn't really matter if it's 21 million or 21 trillion or whatever, because you don't need a huge amount of coins to support the whole the whole world economy, because you can divide them as small as you like. Although you have 21 million Bitcoin, you can have each Bitcoin is 100 million satoshis, and you can then add more zeros to that. So it's easier to divide. And the same, so whether you consider Bitcoin or Cardano or any other currency that got like a hard cap and has got a essential of decentralization that you cannot tamper with, that represents a scarcity that any physical assets cannot match, because the scarcity of gold or oil or commodities or whatever else it just depends on the technology that is used to access it. So as the technology gets better, the amount of gold and other things that are put in circulation grows. So there is an inflation connected to that that's simply not going to be there on something that is decided by code, and nobody can affect the supply of. So for me, kind of looking forward rather than seeing the CBDC system really doesn't make any sense, because what is the point of having different digital currency in the current world where all we're looking for is one currency that we can use everywhere? Really, we wouldn't need to have 20, 50, 100 CBDCs. We only need one. So if the talk was about create a world currency, then it could have some legs as well. But doing a digital dollar, a digital pound, a digital yuan, it just doesn't make any sense for me. The only thing it makes sense is the control. So the reason why nobody would accept Bitcoin or Cardano or any other currency at the moment is because they can't control it. And that's the reason why it hasn't already been accepted more widely. But I'll tell you what, I mean, everybody is watching El Salvador like a hawk, because if they can prove that that system works for them, that is a bigger problem for the US that the little economy El Salvador can represent, because it's just like it's a proving the point. And if they're proving the point for El Salvador, why can't then another 50, 100 countries like El Salvador do the same thing and not use the US dollar instead? And that would be a big problem for them, because at the end of the day, they are using, at country level, the US is using everybody else's money to buy what they need for themselves. It's good for them, because they're not spending their own money, they're spending yours. So, all the time they can do it. This is why they're so rich, because first of all, they stolen everybody's gold in the 70s. And now they're spending everybody else's money because all the countries in the world store dollars as a reserve. The moment you don't use it anymore, the dollar disappears and the US loses its position as the world economic power, the same as Britain lost the same position at the beginning of the century. Okay, it just like phases. Okay, Jonathan, sorry, without me asking you every time, please put your link anyway, just to remind everybody. I remind everybody that Jonathan runs a Cardano session at 9:30 on Discord every week. So it's 9 o'clock now, so in less than half an hour. So those of you that are, I'm not been there before, I would encourage you to follow that as well, because for me, there's no other ecosystem more exciting than Cardano at the moment. Okay, so anything that you can learn from Jonathan would be great. And Jonathan has inside knowledge, being a Cardano stake pool operator, so he lives and breathes Cardano every day. And by the way, Jonathan, if you have it handy, could you also put the link for the Cardano London event? I just registered, by the way, this week, so I'm definitely going to be there in coming up in November. And anybody that wants to come to London and come to the event, they can register as well if there are any tickets left.
When is it?
I don't think they have selected the venue yet. They said it's going to be somewhere in Soho, but I don't think they have selected the final venue. But I noticed that on the meetup group there were still tickets available. The tickets are free, by the way. So
what date is it, please, Luca?
There you are. Just the link has just been posted, so you can check it out. I can't remember. It's in November. I can't remember now. The 20th, I think.
20th, yeah.
Yeah, the 20th. Yeah. Yeah. So it's the it would be good. The last event was really good last year, so hopefully this one will be just as good. The main one this year will be in Switzerland, But the London event is being supported by the Cardano Foundation, so it's got some some funds to do a nice some nice things. It's not just going to be a meetup of enthusiasts. So if you are in, I don't know, Eric is not here today, but Eric may want to go to the new event as he lives in Switzerland. For those of you around the UK, I mean, I would encourage you to come to London, and if you are somewhere else in Australia, New Zealand, have a look on some local events, because I'm quite sure that there are going to be some events local to you as well. If not official, at least unofficial events by the Cardano communities in your area. Okay. Any last minute questions? We're just going over time, so that I'm happy to stay for a couple more minutes. No, nobody has any questions. Sorry.
I got a very crazy one. Is it okay?
Yeah, sure.
I picked up, I don't know where, maybe on Twitter somewhere. It was that someone suggested that maybe Bitcoin was just created by the CIA. You may laugh at me for all these very crazy theories. So we don't know who created it. So I just would like to hear your comment on it, and you may laugh very, very loud. I didn't think of it myself.
Yeah, no, I've heard the same thing in many different places. I mean, if that was true, it would surprise me very much, as they haven't done many intelligent things in their history. So if they come up with such a genius idea, they would have been good. But for once, they would have done something good. I don't know. No, I don't know what to say.
Very improbable. Okay.
Conspiracy theories. Conspiracy theories. I don't know.
I'm not in a conspiracy bubble at all. I'm just trying to pick up a bit on the big picture.
I know. My answer is I don't know. If you get to know something on the inside, then let me know. Okay.
Okay. Thank you so much. Oh.
No problem at all.
Thanks for a great session again.
Okay. Okay, guys. I'll that's it then. If you don't have any more questions, then we'll close the session here. I remember that Jonathan just posted his link in the chat box, so I'll just give you a few seconds to, if you haven't seen it before, to click on it so it opens on your computer, and then follow it at 9:30. Won't be able to be there, Jonathan, as I got calls today, but I say when I can, I do make an effort to be there as well, because it interests me as well, apart from anything else. It's really good. It's really good resource, and thank you for coming every week as well, and for being part of this. I think if we can actually build more of a crypto community and attract people from different ecosystems as well, that would be even better. Because I think we're all in it together. So just welcome. If anybody knows of other people, they are kind of like really into a particular crypto community, at least one of the main ones, and not talking about obscure projects, but big ecosystems, then invite them in. Okay.
Just to say as well, you did the opportunity knock spreadsheet last week.
Yep.
We've had a couple of entries already, so worth everyone checking out, looking at some opportunities.
Fantastic. We'll talk about it on the Monday call. Okay. Anyway, I haven't a chance this week to actually look at it, but I'll look at it over the weekend. Okay.
Thanks, Luca.
Hey guys, goodbye everyone. Have a great weekend, and I'll see you again next week. Okay. Bye everyone.